Hello and welcome back. Let's talk about commodities now, and we have seen a bit of a jitteriness continue, but it's mostly investors taking square positions ahead of the Jackson Hole meeting. And we have seen most of those base metal prices also gain up slightly. The dollar has seen a bit of a weakness, and that really in turn has supported some of those prices in the markets. Let's quickly get in some steel information first, and for that we are now joined by Anita Krishnan. She's Associate Editor, Steel News, PLATTS, and she joins us on the show. Anita, hi, welcome. What's your view on the steel prices going forward? Because 2012 has seen surplus steel and decline in prices.
Well, PLATTS does not forecast prices, but what we're hearing from market sources is that it looks like things are going to be rather pessimistic for the rest of the year. In fact, one of the main reasons for this is Chinese mills' reluctance to undertake production cuts. I think there were recent reports by a bank just last week saying that the supply glut in China could take another 9 months to ease off. So that has gotten market sources worrying that if that's going to be the case, then we are unlikely to see a rebound sooner than later.
Anita, since you are in India, what's your sense coming in for the Indian steel prices trends here? How do you see the demand supply?
Well, India as a market has been particularly resilient for the last few months, especially when prices have been falling internationally. For most of the late 2011 and early 2012, India had been able to hold its ground. We saw prices, especially for hot rolled coil, remaining stable, if not increasing. We saw prices for construction steel rising tremendously because of supply issues. But if you talk to market sources today, they still hold a largely pessimistic view for the rest of the year. One, they see demand. One, of course, they see the pressure from falling prices internationally, especially from China. So whatever support we had been getting from the weak Indian rupee is probably unlikely to offset further falls in Chinese prices, which is what the Indians say that they're very worried about right now. And in terms of demand in the market itself, the sentiments are weak, is what we're hearing. And we're also told that whether any seasonal uptick in demand that usually happens in October or November would tick in this time is largely doubtful. In fact, one of the steel producers told us that they see just a 10% chance of a recovery in domestic steel demand in October, which is rather alarming.
It sure is, Anita, but last 7 days have seen quite an uptick, at least in the Indian futures when it comes to steel prices. But what's your sense going forward now? The steel supplies are surplus in 2012. How do you see 2013 picking up, also in sense of economy now?
It's rather difficult to say right now because we're almost towards the end of 2012. We just have another 4 months to go, and it could probably be by the end of 2013 before we see, the latter half of 2013, by when we begin to get a sense of where the industry is headed, not just domestically but also internationally, where economies are headed. It would be difficult to expect an optimistic turnaround in as short a time as between now and the first half of 2013.
All right, Anita, we'll let you go at that. Thank you so much for joining us. So that's the steel view coming in. It's a bleak chance that the demand will pick up in 2012. But as of now, in the last 1 week, as according to all of those commodities, steel also has seen a bit of a gain up coming in there. Let's also get in Ashok Mittal. He's CEO Commodities and Currencies MK, and he joins us live on the show. Ashok, hi, welcome to the show. I mean, of course, we've heard about steel and not a very strong view coming in for that one. What's your sense coming in for the non-ferrous metals now?
See, basically everybody is thinking what will happen at Jackson Hole, but I think we are not really expecting too much to be announced today. So there will be time when we see a lot of movement during that speech when it starts at 7 o'clock. So I think market will take a clue at that, but we don't really expect too much to happen. So in that case, we might see a lot of volatility and also a downside pressure on base metal as well, like any other commodity, because ultimately that is going to impact the US dollar as a currency. So overall on the base metal pack, we think that the pressure on downside will remain because fundamentals are not very, say, strong. So on copper, we think that about 3 month LME forward should fall somewhere about say $7,300 to $7,400. On Indian market, copper might go 15,416 levels, and we are actually advising to say sell. But only base metal or metal which we think is fundamentally better is aluminium, because the demand in China has actually increased a lot. Their import has actually gone up a lot while export has actually come down, and there are about a lot of firms which are investing in aluminium. So we think from a positional perspective or for long-term perspective, aluminium is something which is little positive or promising, but not the other base metals.
Sure. Mr. Mittal, what's your sense coming in for the precious metals? Because the only thing that is keeping them up is the hope of a stimulus. What's your sense in gold and silver?
Our idea is that there, as I said, there won't be any, say, QE3 or any kind of announcement. So we might see some kind of a downside happening. Technically also, last week we were expecting that maybe 1700 will be broken on gold, and so is silver should go somewhere about say $32, but it is not happening. Rather, there has been a pressure on the downside despite of rupee depreciating a little bit more. So we think that the range for gold should be somewhere about 1635 to say 1685 or 1690. So we are advising to sell on the upticks and with a target of say $1640. So from here gold can go down almost say 200-300 rupees. So is silver, which is not really moving up. So we expect maybe we see below $30, maybe $29, $28.5 as a target after say today's evening events. And then we think that there is still some time when we see the upside movement. So right now we think that the downside pressure will be more on gold and silver both, so advising them to sell on upticks.
Mr. Mittal, what's your sense coming in for crude as well? Because July and August have been quite bullish days, but do you see it spilling over to September now?
Not really, although the earlier we had a view that it will go up and which went right also, but after that we are seeing a lot of resistance at current levels, and technically now I think it is on the downside, and also you see that the stocks are quite high currently, and as well as this whatever we were expecting, the disturbance from the supply side in Mexico, that is also now over, so no hurricane. So we will see more supply happening right now, and will not see really any increase on the demand side. So we think the pressure will be on the downside, and we might see somewhere about $90 in crude oil, NYMEX crude oil, and so the Indian prices on crude oil might go at say 5200 or below that. So selling on crude oil is also advisable with a $1 stop loss. That means you keep a risk of 50 rupees, and downside will be 150 to 200 rupees.
All right, Mr. Mittal, we'll let you go at that. Thank you so much for joining us today with your sense on all of those commodities. So that is MK's view, selling in most of those commodities as the hopes of a stimulus are quite dim coming in from Jackson Hole today. With that, it's out of time on the FNO show, but handing it over to Tanveer then for closing trades.